thank you ever so
Okay,
much for Chris and Clizia for joining us this evening. I will hand over to you two.
thank you, Rebecca. And yeah, thank you for this opportunity just to share some thoughts and guidance around insurances. I know that some of your audience members and families have asked to find out a little bit more around a few bits of insurance products and loss of income, etc. So I'm Chris Harland. I'm just going to, hopefully you can see my slides. I'm joined by Clizia, one of
Hello.
our mortgage and protection advisors. I am one of the proud partners and owners of Well Financial, along with Dan Dawes, who is the mortgage side of the business. I'm on the insurance side and very passionate, as is Clizia, about the need for insurances to give families financial resilience. And that's what we're going to be talking about today. So a little bit about us going into that loss of income. There's a few myths we'd like to just dispel there and looking at the options. Planning for the future. So people with cardiac disclosures, families with children with cardiac disclosures as well. And then Clizzie's going to update us on what is quite a noisy mortgage market at the moment, and the value of advice from a mortgage broker has probably never been more valuable in terms of getting the best deal in the window of opportunity of remortgaging, etc. We're then going to look at extra support from us, as well as our meaningful mortgages as well that we do. So, as I say, I'm the head of protection and the director of World Financial. I sadly had my own cardiac event last year, which I'm pleased to say I'm okay from. I had a myocardial infarction last May and one stent that was fitted, and I was fortunate it was a lower severity cardiac event, apparently something hereditary. And obviously working with you guys, Rebecca, Raj, all the staff and volunteers at Children's Hearts UK is really filled with purpose for me, especially, and I know Dan and Clizia as well, and what we can do to help the family members and also raise money along the way in terms of donations is really important to us. Clizia has been a mortgage and protection advisor, predominantly a protection advisor first and foremost, and has over the last sort of 12, 18 months moved into mortgages. She's very, very fluent in many languages. Aren't you, Clizia? How many languages now?
Someone says I speak 6 different languages.
I'm going for 7. I'm still going for 7.
Oh, thank you.
But I will be passing over to Clizia to give us a little bit of an update shortly. So if I push
Yeah.
on, what we're going to look at is a loss of income and what's available to parents, to individuals, if that happens due to obviously being off work or being off work because of a poorly child, or your own sort of incapacity. So if we look at what's available from the state, statutory sick pay if you're not able to work and you do not get sick pay from your employer, which a lot of people don't get. No, I would always say reach out to HR and find out, what does your sick pay structure look like. If you work within somewhere like the NHS, you can be really fortunate to get sort of 6 months full pay, 6 months half. So you've got a little comfort there if you obviously can't work for whatever reason around sick pay. But if you haven't got that, SSP is not much. It's £118.75 a week. And we can get that up to 28 days. So that's kind of what is there for state needs. Now, we can have insurances in place, and that could be through the workplace, be your own income protection. So when we look at income protection, which we're going to look in more detail in a minute, it will only be if the person insured is incapacitated, if they're signed off work by a medical professional. Now, most of the claims in income protection are generally going to be around mental health, so stress, anxiety, depression, etc., and musculoskeletal. So it could be a bad back. That's the 2 most common forms of claimants in the income protection space. Obviously, if there was a family member or a child poorly, a parent will obviously take time off work to nurse that child back to better health, generally at the detriment of their income, unless they get the SSP. Now, income protection it's a bit of a myth. It will not protect you if you're taking off work to nurse a poorly child, unless obviously that led to a mental health issue, and then you do obviously move into the space of being signed off by a medical professional, but that's a very different area. So I just wanted to make everyone really aware that income protection is for the life insured. It wouldn't be because of nursing a poorly child. See, what could also kick in is employer benefits. So again, speak to HR. What have you got? Some employers are very, very generous with their enhanced sick pay, flexible working, and compassionate leave when it comes to situations within the family circles. It varies from employer to employer and is not guaranteed. So it's always worth checking in and finding out, you know, what would you be covered for. Children's cover, I'm going to come to this in a bit more detail. With critical illness cover that an adult potentially has, there could be cover for your children. And if they do have a cardiac issue that is covered by an insurer under a children's critical illness cover, it could pay out up to £100,000. Generally, £25,000 is the payment that is made on a critical illness cover for a child. Obviously, it must meet the definitions from the insurer. When we look at the critical illness market, cancer, cardiac events, and stroke are the three biggest claims in critical illness space, and they make up nearly 80% of the claims. There's something we touched on our last webinar called Midlife Child Shield, and that has a hospitalisation benefit as well. That is something that people may want to look at, because obviously a lot of time can be spent with children in NHS, etc. And that cash benefit is also available if you've got health insurance. So if you're getting treated by the NHS route and you have private health insurance, whether through an employer or personally, you can have a cash benefit, and it can be up to £50 to £100 generally per night per stay in hospital. So we would always say, if you're not sure, give us a call. Myself or Clizia would be delighted to help. We can help you find these pots of money that you've got the right to claim upon. We will not only help you with that claim journey, but we'll also try and help and guide you in the right direction. Maybe if you were looking to take cover out in the future. So that will bring me on to insurances in general. So there are three general insurances available to families, individuals, and one of those benefits is available to children. So I'm sure most of you have heard of life insurance. It's pretty simple. It will pay out if the person over 18 years of age and above passes. So if that person dies, there will be a lump sum paid out during the term that they're covered for. That could be until 90 years of age. There are some policies that are guaranteed to pay out and upon death, even if that was past 90 years of age. That's called whole of life. But majority of the insurance is term insurance, and that can be at any point along that sort of term until 90. It will pay out a lump sum that would be tax-free. We would always advise placing life insurances into a trust. That will help navigate around probate, which is an awfully slow process. It will avoid inheritance tax as well, and we will generally advise and think it's prudent to put life insurances into trust, and we will take care of that for you at no extra cost, bring in sort of additional trustees into the conversation to make sure that it perhaps meets your letter of wishes or your will. There is something called terminal illness benefit. People get confused around that. Terminal illness benefit is where life cover can pay out whilst you're alive. Okay, if you are diagnosed with a nasty, perhaps stage 4 cancer, and you are given less than 12 months to live, it could pay out whilst you're alive. And people have been paid out, and then they can go and seek medical treatment, make memories, do whatever they want with the funds. But that's called terminal illness benefit, and sometimes that gets a bit confused with like critical illness cover. The only exclusion on life insurance is suicide in the first 12 months. There is one insurer that would cover that, but generally that is the only exclusion we'd ever see. If there's health exposures in cardiac exposures, my insurance, for example, if I wanted new life cover now, would be loaded because of my cardiac history, and it would be about 175% loading on standard life insurance rates. Okay, so there would never be an exclusion, obviously, it would just be increased premiums. Family income benefit is a really valuable piece of life insurance that a lot of advisors don't even talk about. And Lizzie and I and everyone at Well Financial believe this is a really important benefit that individuals, families, especially when there's one of the parents earning higher income or there's children in the family unit, it will basically behave a little bit like income protection upon death. So if someone were to pass, one of the parents were to pass, the surviving partner could well have their mortgage paid with the life insurance. But what this would do, family income benefit would pay a monthly amount until a point in the future. And that could be till perhaps the children or the youngest child has finished full-time education. So it's helping the remaining parent stay in the house, meet the dreams and aspirations, obviously put food on the table, pay the bills, put children through further education, etc., etc. And it would be X thousand pounds a month, to say, until the child or the youngest child is 18, 21 or 23 at the end of full-time education. Okay, so that's called family income benefit. It's still like life insurance, but really helps avoid over-insurance and under-insurance. Income protection, we sort of touched on it a second ago. It will pay out if you're signed off work by a medical professional. Now, that could be for a multitude of reasons, whereas we're going to come to critical illness in a second. It's generally on specified conditions, generally about 60 conditions with, as I say, heart attacks, cancer, strokes, multiple sclerosis, etc., as the big claimants in critical illness space. Income protection, as long as you're signed off by that medical professional until potentially now until when you retire, 70, whenever it may be in the future, that's what we will look at and sort of understand what does the future look like, what have you got with work, with sick pay, etc. And that will give you a monthly income up to circa 65% of your gross income. With income protection, you can never get yourself insured, so you're in a better financial situation than you were before, because what that can lead to is self-harm from people, and that's what insurers will limit. The monthly benefit is 65% of gross earnings. Okay, so income protection, really, really important. Belt and braces, I had income protection, and when I was off poorly last year, I had 3 months deferred period on my income protection, which meant I had to wait 3 months until it would pay out. Now, I was only out of the business after my cardiac event for 11 weeks. So I didn't need to claim on my income protection. And the reason I chose 3 months is because anything past 3 months, something quite serious has happened. Not that what had happened wasn't serious, but I was able to return to work. I could afford to self-insure for those 3 months. But what I did have is a critical illness plan. And that did pay out that lump sum on my cardiac event. And that did give me the financial comfort, my wife, Michelle, and the boys, knowing that, there's going to be a lump sum paid in the event of that critical illness. And that could be a lump sum that's generally driven by probably the premium more so, because obviously the chances of claiming on critical illness are far greater than claiming on a life policy, because we're all going to live generally, is what the insurers suggest is past retirement, past the end of our mortgage expiry. Okay, but there's more chance of us claiming on a policy like income protection or critical illness cover before then, and that's why the premiums are going to be a little bit more expensive for critical illness cover and income protection versus life insurance. So again, subjective, how much do you need? It could protect a year's worth of income, or it could be based on how much budget have you got for insurances? But we will do a full review and risk review and mitigate all the risks that you got as a family unit, put some recommendations together that will tie in with your budget. Because the last thing we want is people to resent direct debit. This is really important insurance to give financial resilience, to give financial comfort should something happen is unexpected. And as we all know, these things do sadly happen. And especially as we approach middle-aged, we see more sort of stories in family and friendship circles of this happening. All insurances pay out tax-free. Okay, so there is no income tax or anything associated with any benefits paid out here. And I do need to be very clear that anything pre-existing when it comes to health disclosures, because there would be an underwritten health questionnaire for all insured children and ask questions. It would just be anything pre-existing would be excluded. Generally, the adults would answer the questions, and then an exclusion to the policy it actually could apply. So I'll just pause there slightly because obviously there's a lot to take in around all these really important insurances. Is there any questions from anyone or you, Rebecca, regarding any of the detail that I've just been through?
I just had one question. So where you need the pre-existing health disclosures could be excluded. So if you could explain that a little bit more. So say my child's already got a heart condition.
Yeah.
If it was and they've had surgery and we're going on a smooth path at the moment, but something else with that condition happens and they need further surgeries, would the whole thing be excluded because it's related to that health condition?
Generally, yes. So if there was a cardiac disclosure from a child, it wouldn't be underwritten. There wouldn't be any questions asked on the application. It would just be at any claim stage, any pre-existing health disclosures would be excluded from any claims for that child. Now,
Okay.
if that was a cardiac body system that was going to be excluded for that child, it's going to be anything associated to or related to the original disclosure.
Right.
Now,
Okay.
that's the important detail. If it was completely unrelated and it was still potentially within that cardiac body system, that could well be considered for a claim. Now, if that led to something else, like a cancer or something, that's another body system completely different, and that would be absolutely considered for a claim.
Okay.
Does that answer the question?
It does. Yes. Thank you very
Yeah.
much.
Now, if obviously there's other children or any future children born, then there is no pre-existing conditions to be excluded on the policy. We do in some of the policies, and some of them are excellent at covering complications of pregnancy, etc., that need a little bit more sort of detail around when we explain them. And we would advise particular policies for people expecting to have a child. And we've had quite a few claims go through. They're not huge payments. They're generally about between £5,000 and £10,000. But that's something, again, if there has been complications, might even be worth considering to look retrospectively and see if there is any chance of claiming, from something to happen previously, and there was this already in place.
Yeah.
Okay.
Yeah. Thank you.
Oh, you're welcome. I'm going to pass over if there's no other questions from anybody regarding insurances, but please reach out if you've got any policies you want us to review. They're free. Our protection reviews are absolutely free. If we go forward and arrange any policies for you, we will make a very meaningful donation back to Children's Hearts UK, and the same for the mortgage. And we'll go through that at the end. But I'm going to pass to Clizia, who's going to tell us about the noisy mortgage market at the moment. Over to you, Clizia.
Thank you, Chris. Yes, so as Chris said, I'm a mortgage and protection advisor, so I can look after both mortgages and insurances. So I'm just going through a little bit of market updates. So we've seen that since last August, I mean, we had an interest rate cut. So it's been steady since last August. We are hoping to see another cuts in November. So our expectation are that rates are projected to fall to 2.5% by 2027. Of course, we're not economists, but our expectations are that, interest rates will go down. So I would encourage, of course, that everybody is discussing the mortgage options 6 months before the rate comes to an end, because you will be in a better position. We can discuss your plans, your options, whether you may want to stay with your current lender, or maybe if the situation is, positive, we can move you to another lender if that is the best position for you, the best option for you. Yeah, as Chris has mentioned earlier on, so we are more than happy to donate 20% of all of our income, so including mortgages, of course. So it's not restricted to insurances. So yeah, so that is a very, very, nice and good way to to fundraise, I would say, so to support charities like yours, I would say. So here we have agreed, with one of the latest, because this was updated last week, so the 8th of October. So we've seen, that 60% loan to value on a 2 fixed rate is one of the best solutions at the moment. It really depends on your material circumstances, because of course, if we have to go through a specialist lender, of course, the situation may change. So, but potentially this is the situation on the market right now, I would say. If you can please go to the next slide, Grace, please. Thank you. Yes. So we have a wide mortgage team at the moment, which alongside the protection one. So we have an expertise on mortgages and on protection as well. So we can assist first-time buyers with the planning as well. So it doesn't mean, if you start having conversation with us and you're a first-time buyer, even if it will take 1 year or so, it doesn't matter, because we always say, please don't rush, please speak to us as soon as you're starting thinking about getting into the property ladder, right? So we can assist first-time buyers, a second home purchase as well. So why not remortgages, buy-to-let, commercial finance. So we do have a specialist department for commercial finance, including business loans. Okay, so we basically can deal with many types of mortgages, because we do have access to a panel representative for the whole of the market. So whether you're buying through a right to buy scheme, shared ownership, we're buying a luxury property, we can assist with that. So some of the criteria, so the eligibility criteria. So of course we have listed some. So this is not the full list, because of course, the situation is very unique for every single client. So this will change, but the main criteria on the mortgage eligibility are the age, the credit history, the income and employment type, the deposit that you have and where that deposit is coming from, the residency type and the property type. So we can assist on both, freehold properties, leasehold properties, and etc. Because those two are not the only two types of properties available on the market. So yeah, we are experts. Based in Essex. So we are trusted mortgage and insurance experts in Essex. Our office is in Maxty, not far from Colchester. Okay, but we can assist, the whole United Kingdom, I would say. So we can assist, as I said, we can assist first-time buyers. So there will be a fee-free, personalized advice. And as I said, as soon as you start thinking about going and getting into the property ladder, please reach out, because especially for first-time buyers, we don't charge any fee. So that would be a very nice and fee-free advice from our side. Remortgages and moving home, as I said, if you're planning to secure another fixed rate, or a tracker rate, because, it really depends on the circumstances, or you're planning to sell and move home, we can assist with that. And we can, of course, as we have access to a wide panel of lenders, we can give you guidance and advice on how to secure a good deal, basically, in mortgage term, of course. We look after buy-to-let and portfolio landlords. So that is a dedicated advisor that will look after your needs, your circumstances. That will depend where you're looking to buy, whether this is an investment property. Of course, every single property will have their specific requirements, so we can deal with that. We look at, first time buyers in terms of investments, or portfolio landlords, so experienced landlords are welcome as well. We do deal with specialist lenders, so because not every case is very smooth and simple. So if the situation is a little bit different than the normal circumstances, we have access to specialist lenders who can provide, mortgage products as well. As Chris has mentioned, we look after protection and health insurance on the side of the mortgage. So, of course, some of the options that we have available, again, not restricted to a single insurance provider, same as the mortgages. We can look after life insurance, critical illness cover, income protection, health insurance, and building and contents insurance.
If I may say, Ecclesia is an absolute expert in buildings and contents insurance. It's a real minefield of a market at the moment. I'm sure a lot of people have seen their buildings and contents insurance renewals go up.
Yeah.
And yeah, please reach out, and Ecclesia would be delighted to help, because that is a bit of a tricky one at the moment.
Yeah, it's my expertise, actually. Yeah, so we do offer extra support. Okay, so we can refer you to a reputable panel of solicitors, so to look after the conveyancing process. This will be from, of course, so you would need to have a conveyancer before applying for a mortgage offer or making an offer. Potentially, right after making an offer on a property, because to get a memorandum of sale, of course, you will need a conveyancer. So we're more than happy to refer you to one of our solicitors from the panels. We can also refer you to will writers. So we have this specialist guy called Nicholson, who can look after your will writing and lasting power attorney. So if you need
wills and estates that work with Children's Hearts, that's Ian Nicholson. So if anyone is looking to get their will reviewed, or a new will, or a will done, then do reach out to Rebecca, us, or Raj and the staff, and they'll gladly point you in Ian's direction.
Definitely, yes. We can support as well and look after home insurance. So we deal with 5 stars de facto rated products. So meaning that, you're getting the best quality service from us and from the insurance provider as well. So this can be, for only, the insurance, so building insurance standalone, or it can be a combined one with contents insurance to protect your personal belongings, even when you leave the property. So when you are outside the property, you bring expensive stuff with you. So we're here to support. So we aim to offer a stress-free claims procedure. Okay, so we are here to assist. So if you need to make a claim on a life insurance, on a protection side, or on a home insurance, of course. So we are here to assist. So we really want this to be as stress-free as possible, really. Because just bear in mind, the peace of mind is about the correct product, and not in knowing you are protected and supported when you need it most.
Thank you, Ecclesia.
All right.
And just into our last slide, Rebecca, just to remind people, we would dearly love to be donating large sums of money every month to you guys, and we are and have started doing that. So we will donate 20% of our fees, our commissions on mortgages and insurance, for any support that we give any audience member, every family member, every staff member, anyone that's a friend or a family member of Children's Hearts UK. And I know it's difficult out there in the charitable world at the moment, but these are meaningful donations, and it could be anywhere from 250 pounds upwards. Okay, so we are trying to raise as much money in a kind of non-emotional transactional way, such as a mortgage. You're going to get fabulous advice, and you know that you're going to be raising money for an amazing charity as well along the way. So we do have a web address, so it's wellfinancial.co.uk/CHUK. That will be an area where you could pop your details on there, and then Clizzy can give you a call back and help you with anything you need when it comes to mortgages, insurances, etc., etc. So